because the insurance premium on the building with respect to our 58 units has gone up $60,000 a year, which is
insane.
Crazy. We put together a Substack, so this has been a little bit of a long time in the making here. So, are you familiar with Substack?
No.
Okay, so Substack works basically like a newsletter, where it's kind of like a social media app, but people can subscribe. You could post podcasts to it. You could post videos to it, stuff like that. And there's a chat option in there where when you post something, if people subscribe to it, they'll get notified to their email.
So you would download an app called Substack?
Yeah, or you don't have to.
Okay.
Or you just go on your computer and subscribe to it with your email, and you automatically get notified when there's an update in the, say, the Coachwood Capital Substack, or you just know where to go, like coachwoodcapital.substack.com, and you'll get all of the Coachwood Capital updates on the Bayview Palms, Canton Manor, or even new properties that we're working on. So this is something that we're going to be launching, I believe, probably today. Because I know you know sometimes we get people asking. I think we've rolled it back to quarterly updates only because there's not a lot going on. We're raising rents considerably, month over month. I mean, I'm seeing at minimum a couple tenants that have renewed, and we're talking like minimum couple $100 renewals from last year's renewal, which was also minimum couple $100. So I'm also seeing a couple rents come in that were previously, $1,250. Now they're $1,750.
Holy smokes.
So I'm seeing year over year $250, even $300 in some cases. And that was also the same as last year. So we're going into like year 2, right? And we had the bulk of rents come to renewals around this time last year. So now we're bumping them again. So last year we bumped them to around 14, anywhere between, I want to say anywhere in between 14 and 1,500. Now we're going from 14 to 1,500 to like 1,650 to 1,750. Mm-hmm. In some cases, ones that are like really cleaned up, like 1,800. Mm-hmm. So yeah, it's doing very well. Now here's the thing that I will say. Before I get into, more positives, I'm not saying that we won't run into a weird scenario at some point, because what's going on in the market and, in the US in general, thank God we didn't do this in Canada, that's for sure. But in the US in general, it's a little bit of a weird scenario in terms of we've got a really good rate. 3.8% mortgage rate. We had a timeline of 5 years, right? We're in year 2 at this point, right? If rates don't come down within the next 3 years, obviously, we're going to be in a situation where, what are we going to be renewing at? You know what I'm saying? So that's something to also pay attention to. Do I think that rates will stay this high for the foreseeable future? No. I think within the next year or two, we're going to start seeing rates come back down to 4.5%, 5%, 5.5%, something along those lines, which is not far off of where we are now in terms of what the mortgage rate that I have on the property right now. So it's going to be a little bit of a waiting game to see what's going to happen in terms of, okay, well, in 5 years, are we cashing out? Are we cashing out, maybe with 2 years left on the mortgage to capitalize on the reduced rate that I negotiated from the purchase or the beginning? The fact that I rehabbed a lot of the properties, right, and put a lot of money back into the property itself to get these high rents. Are we going to leave a little bit of meat on the bone for the next buyer to come in so we can get top dollar for it as well? So it's a little bit of a wonky situation right now in terms of what's going to happen with rates when the mortgage matures in the U.S.
Yeah.
So obviously that's not something that can be predicted. It's obviously not something that we could have predicted going in buying. But all in all, you better believe that we are absolutely positioned as good as it possibly could be raising rents. The market there is crazy. It's in the perfect submarket in relation to one of the fastest, most desirable places to go and for growth, which is obviously Miami, Dade County. And being in North Miami, which is a 15-minute drive, you have a workforce that supports that major metropolitan city in our unit, but we bought it for workforce price. And I can't imagine what those would sell for now.
Yeah, great point. You bought, right? You got the fixed debt for 5 years. The stuff that's going on now, nobody could predict.
No.
Nobody can predict. They're out of control. They're not providing any consistent guidance. So how can we predict? But we are prepared.
Yeah, 100%. And at the end of the day, and another caveat as well is that insurance skyrocketed. We should be cash flowing if insurance. That last what was that hurricane that hit Tampa and all that? What was that hurricane?
The name of the hurricicane, I forget.
Yeah, Ivan or something. Was it? It wasn't Ivan, was it? That hurricane that hit that area. The Clearwater, Tampa, or couple other one, Naples, Fort Myers or whatever. That hurricane that came in that wiped out a lot of the areas there, scared a lot of insurance companies out of the Florida market. So you have even insurance companies that are big up in the eastern coast that won't even touch it. So like the market in Florida, and I don't mean like that part of the market. I mean all of the market. And anybody that's from Florida or has property in Florida can attest to how much the insurance premiums have gone up. And this is pretty common. A big storm rolls in, it demolishes everything. Insurance companies pull out of the market. There's only a few left willing to do it. What happens when there's less competition? Prices get they skyrocket.
Yeah, but that attracts other insurance providers.
Not yet. That's the problem. So it takes it takes time for more competition to enter the market. So what I predict is going to either happen is, number one, more competition is going to enter the Florida market, and that's going to drive prices down because that's what competition naturally does. Or if that doesn't happen, the Florida government will actually step in and say, listen, you fucks. Number one, stop blocking people from getting insurance. And number two, you have to stop gouging people, which I don't necessarily care for government intervention, but obviously we have a bias situation going on here. So if it happens, I don't mind it. Mm-hmm. But that's what I think is going to happen. I do think that more insurance companies are going to come in and drive prices down with their competition before there's government intervention. So that's also a caveat that we're dealing with as well, is the increased insurance premiums, because the insurance premium on the building with respect to our 58 units has gone up $60,000 a year, which is insane. Crazy.
That's insane.
It's gone up about $5,000.
How is that not gouging?
That's what I'm saying.
It's not even.
Yeah. Well, you have less competition, right? A lot of people just don't even want to deal with Florida because of that. A lot of that storm actually put some insurance companies out of business.
Yeah. Understandable. It was massive destruction.
So that's what happens, right? You have less competition, prices go up. You don't have you have to have insurance or you lose your mortgage. So what the fuck are you going to do? Mm-hmm. It's a requirement from the lenders to have insurance on your property. So you have to renew it. So that's what we're dealing with. That property that we have down there would have been cash flowing like crazy. Mm-hmm. With these increases, I was not predicting increases this high.
Well, who could?
Yeah, exactly. But unfortunately, with the increase in insurance, it wiped out the extreme cash flow that we would have been experiencing. So it is what it is.
Well, at least for now.
For 100%, exactly. See how it plays out. 100% for now. Because that cash flow, we're not going to go backwards on rent. Rent rarely goes backwards. Yeah. We're not going backwards, right? And I don't think that insurance premiums will go down to where they once were, but they will go down, right? So if insurance premiums come down, if we have to renew at a 1% higher rate, like, we're still in amazing shape.
Yeah.
The rent roll has increased by way more than what that mortgage renewal will be and what that insurance premium increase will be. Yeah, it's going to be insane. So what will that do? Increases NOI for us, and it props the value of the property up at the disposition.
And keep in mind, if every landlord across this whole area is experiencing higher insurance premiums, which everybody probably is, that means they're all charging higher rent. That means 100%. Rents are growing faster.
Exactly.
Like there's always a way. I don't know. In the business world, the big players always win. 100%. This is why.
And this is exactly that is more than likely one of the reasons why we're seeing rent skyrocket as high as it is.
Yes, for sure.
Yeah.
But this is also why like the long game is so important, because 3 to 5 year windows are unpredictable.
Yeah.
You got a storm, you got rate hikes 12 times in a row. You got all this stuff happening in a short period of time.
Yeah.
And it'll all clear itself out over 10 years.
100%.
But in this window, it's choppy. You don't really know.
Yeah. I'll give you an example. Like somebody's moving out of the country, back to Lebanon, I believe. And I bought his shares of his investment in Bayview Palms. Yeah.
Nice.
Before I even I didn't even go to market. I was like, fucking right. I want those shares.
Yeah.
I want
cash out.
100%. Yeah.
How did you value them?
I bought him for what?
Just that cost?
Yeah. He's like, he presented that to me.
Yeah. Just give me my money back.
Yeah. He's like, I have to cash out quick. I'm actually leaving the country, and I want to make this a simple transaction. He's like, I made decent cash flow on it. And just cash me out. So I was like, fucking
perfect.
Right. Yeah. So give me those shares for sure.
Yeah.
I might, in an effort to be more liquid and go after more property, I might eventually sell off more of my shares in Bayview Palms, because I actually own more than my required amount as a general partner in the deal. And same thing with Canton Manor. So I'm going to start cashing those out, and actually Canton Manor is going to be the next new fund coming up for a big portion of my ownership. I'm going to be selling off. It's going to be positioned really interesting, because I have new management in there, and we're aggressively going after new tenants, new rent. We're actually going to be turning over the rent roll. We had management in there previously that was not as aggressive at turning over the rent roll. It's a senior property. You know, everybody's for the most part on a fixed income, but at the end of the day, our expenses are going up. Rent's going up. I'm not saying I want to gouge them. I'm even giving them a discount, right? Because for the most part, those tenants, the senior communities in the U.S., they don't leave, right? So I'll gladly take a 10% hit on market rate for rent and not have that turnover cost, which is arguably the biggest cost in rentals that people never factor in.
Yeah,
zero
fees.
I've never once seen on a profit and loss statement, I've never seen turnover.
Yeah.
Ever on an expense.
So true.
On an expense line. I've never seen it once. You know, it's more than likely wrapped up into even, it's probably on a balance sheet in terms of, you know, capital improvements and CapEx and stuff like that.
Or property management.
Yeah. It's never, I never see even property management commissions. I rarely see that. That's rarely factored in. So to not have to deal with that type of stuff is a massive advantage, and I'll gladly give a discount to tenants, but you have to pay close to market rate, and we're just not getting market rate. Mm-hmm. So I'm going to go to market with Canton Manor with also a value add play. I'm going to be adding, 3 apartments below,